Hello, everybody, and welcome back to another Farmers Trading podcast here with the crew. I got Vince and Andrew both joining me today so we can discuss some of these markets a little further. We'll get started with some prices on the grains here. We got the May corn currently down 3/4 of a cent at 4.25, and the December new crop corn is down a quarter of a penny at 4.59. Looking into the soybeans here, we got May soybeans down 3 3/4 of a cent at 11.45 and a quarter, and the November new crop soybeans are down 4 1/4 cents at 11.40. I guess we'll get started with those grains here. Going to you, Vince, first. I guess the big news that's coming out here is the WASDE report at the end of the week. What are you hearing? What are the rumblings about maybe projections on those numbers, and what are they going to change? Or
No, I haven't seen a lot from our standpoint on where it's at. I don't think they're going to make a lot of adjustments. One would think that they would increase some corn exports, and whether they offset that with less feed usage, Trump will have to see how that goes. But still think the thing that may surprise some people, not that it's a big change, but some of those projections out of South America, if you look at corn or beans, either one, they're about 13 million metric tons more than last year on both of them. Mm-hmm. Even with the Brazilian problems. Could we cut some Brazilian production? I think the U.S. could. They're still sitting there somewhere around 160 million metric tons on beans, which is probably a bit high, but time will tell us how that shakes out.
Mm-hmm. And so looking at further into this, Andrew, recently it looks like we were maybe putting a bottom in the grains, and then it looks like wheat's really dragging us down today, but we're kind of going lower again today. What are the hopes for a bottom here, and what should a guy be looking at to kind of indicate that?
Yeah, of course, a person's hoping for a bottom, and I think we were fairly confident in one here until the last day or two. The wheat market certainly turned things ugly. You broke a contract low on the Chicago wheat the other day. And then this morning here on Wednesday, you broke the contract low on the KC wheat. And I mean, look at Minneapolis, but I think you did there as well. So that certainly could be some issues going forward for us. But you want to look over at corn and soybean markets like a May corn, so long as you can stay north of where it has been as far as contract lows, I think you could be okay. Looking at a soybean contract, we ran up to like the 20 period moving average there on those here recently, and then now we've sold off from that, so which is normal. You do have a rejection at the 20 period moving average, but if you can find some support around the 9-day moving average or so, and then you can rally back off of that and get through and close above your 20-day, then I think you've got a chance and can start the conversation of where it can go from there. But until then, I don't think you get too excited about that market. Is it getting closer to a bottom than we were a couple of weeks ago? A person likes to think so.
And so thinking kind of cautiously optimistic here, if this is kind of a bottom and we can hold some of those lows here in the next couple of weeks, what are your projections, or I guess what are the numbers we should be looking at for where this thing could go? Do you think it's going to be more of an uptrend then, Vince, or do you think more sideways? Or
I would think you still stay sideways. Corn, let's say it stays in a 20 to 30 cent range, and beans could stay in a 30 to 60 cent range. And we could do that well into May until we maybe get something different with weather. Where we got some U.S. concerns. I don't think there's any big enough concerns out of South America to make any difference at this point. So it's got to be U.S. or else something changes in there. But I think sideways is where we go. And I think producers, if they're out there having to sell some crop, which I think a lot of them are just to generate cash flow and to get those rallies, don't be afraid to do it. And you get a pullback. If you didn't like the price, figure out a way to re-own it, whether it be futures or options.
I think I'm going to echo what Vince said there. The sideways could be a fairly common sentiment going forward here for a while. The old adage is that Oats knows what's going to happen. They're always a couple months ahead of the game, is what people like to say. So you look at the oats market, and they were ahead of everyone else on that decline by a month or two. And then now for the last couple of months, they've been just trading sideways. They're inside of a range bound, slowly forming a pennant. And I think towards the middle to end of summer is when they need to break out of that thing. So does that indicate, what's down the road for the corn market? I don't think it's something you can eliminate the idea of. I think it's a pretty realistic thought right now.
Mm-hmm. And then one other thing on the grains, I guess, with the WASDE report coming out on Friday, other than that, is there any other big news or things that you've heard that a guy should be listening for or look for? Going to Vince first.
I think you just, today you had ethanol report, which it's about what 1.9 million bushels less usage than the previous week. That was through last Friday, March 1st. But we're still, 5% above where we were last year, and there were 130 million bushels more going through ethanol. And we're ahead of the pace of USDA's usage, which is good. Now we just got to see where one has to believe that those guys in the ethanol industry should be making some good money in here with where the price of energy is at and where the price of corn is at. Demand is off a little bit on that side, the way it looks, but all in all, I like some of those ethanol numbers, but I'm not sure there's any other big numbers besides watching those things. Is there some surprise demand when we look at our daily sales? And it'll be interesting when we get into Thursday to say what's that weekly one on corn. Last week the previous week didn't have any real sales, but we still had over 1 million metric tons sold.
Anything you heard out there, Andrew, that you'd like to add? Any reports or things that are coming out or that just recently came out?
Yeah, I saw a headline this morning, and the general gist of the article was that Algeria was buying some wheat and they were getting it for way too cheap or a really low price, is what the article was saying there. And are there going to be people starting to realize, maybe some of these grains, the wheat market especially, might be undervalued, and people want to step in and buy them up just simply because they think it's an undervalued product, whether or not the actual fundamentals out there say it needs to get bought up. Is headlines like that maybe going to draw this thing higher? I'm not saying at all that it will, but it's an interesting one to think about and keep on our radar, I believe.
Yeah, and what I heard this week too was, we've talked previously about the funds being record short, net short in corn, and really net short in beans as well. And I think there were some reports out in the commitment of trades there that they did lighten up some of those positions. I don't know, Vince, have you heard anything in the last couple of days here if they've continued that, or if we've
you've continued some liquidation. The last Friday's commitment to traders report showed a little bit further liquidation, especially in the corn, but I think it's going to really slow down this week on where you're at. Just to back up one note on the wheat market that I think we may be giving us some pressure today. If you looked at SouthCon came out and noted that as of February 1st, that Russian wheat stocks were 61% above the average as far as on the farm storage. And that's not a good thing to see. And they've been, and you take on the side of that, I think in February they had record exports.
Unless you have anything else to add here, Andrew, I think we'll roll on to livestock.
Let's keep her moving.
Okay, looking at the livestock here, some prices. We have the March feeder cattle down $1.47 currently at $250.82. The April feeders are down $1.25 at $255.92, and the August feeders are down 95 cents at $268.75. Looking into the live cattle, the April lives are down 62 cents at $187.37, and the August lives are down 27 cents at $182.50. What's been the big news lately, Vince? I know we've kind of talked about a healthy retracement, that market being overbought. It's been trending very, very steadily up and kind of almost too fast trending up. I don't know. Is it just a regular kind of pullback here, or is there other news involved in that?
I think the market, when you look at the choppiness that we've gotten in the cattle this last week, sometimes you can classify that as a distribution top, trying to find who's going to win the battle, bulls or the bears. And if we take the high out, it's irrelevant. But again, we could get to be in a point in here for a while, just like the grains, where we could go sideways. Some interesting numbers that I saw this morning, and this would be as of last week, but steer and heifer slaughter down 3% on the year, which is maybe a bit more than you would have looked at on last year's inventory. Not huge, but just something to keep an eye on. But beef cow slaughter was down 13% in these first 7 weeks of the year. Dairy cow down 16%. And the only reason I bring that up is this is not a time of year where what they're going to call grind 90s, which is 90% ground beef, holds its value, and it's been holding its own or picking it up. And I think that's why, just because we have that lack of cow slaughter in here, just because we've liquidated a lot of them.
And from a technical standpoint, Andrew, is there anything in the charts besides the uptrend channel that we've kind of been looking at, or any other points of emphasis you'd like to make?
If you want to talk fat cattle, that April contract, everyone's looking at that 190.27 and a half to fill in the gap on that fat chart. So I think there's a lot of people looking at that. And then just overall market sentiment out there. We had our monthly marketing meeting last night there at the office here in Mitchell, and there was a lot of people that were very bullish this cattle market. Just overall impressions and attitudes towards this thing is to keep buying because it can never go down, is what people are thinking and feeling. I'm not by any means saying that's what's going to happen, but there's a lot of people with that attitude in this market. And if they keep that attitude up, I don't see why they couldn't try and push this thing higher. And looking at just that live cattle chart, could they at least fill in the gap on the April 190.27? I think it's possible if people have that attitude and can keep it there long term.
Mm-hmm. And also, I know something that we discussed kind of at the meeting last night was the Packers, and maybe cattle are getting pretty close to the knife, and that they're starting to maybe shorten up some hours at some packing plants because they're not bringing in quite the cattle. Have you heard anything in regards to that, either Vince or Andrew?
I'll go first. And yeah, they're tightening up the kills, and part of that might be because of sheer numbers, but we really shouldn't get to those tight numbers till we get the end of April. I think that's more so a figment of trying to jack up the box beef prices so they can get more profitability back into it.
Yep. The conversation last night that we had was there's talk about switching to a 4-day, just 32-hour work week in the packing
Mm-hmm.
plants. They have not done anything officially yet, but the conversation is being looked at there. So we'll see if that turns into something, I guess.
Yeah, I think as you get down the road, you get into the summer, that could be more of a possibility than a short term in here, just depending on where those numbers get to.
Yeah, I agree.
I think we'll roll on to the hog market then here. Looking at some prices for the hogs here, we got the April hogs down 75 cents at 84.42. And then the June hogs, they did break that $100 mark with they're down $1.22 right now, but they're at 137 on the board. Technically speaking, Andrew, is there anything you're seeing in those charts that a guy should be looking for?
$100 used to be old resistance. Now will it be new support is the $1 million question on that June contract. You look at the hog index, you have the April still trading about, is it a $4 premium roughly to what the index is at now this morning? So we are still premium there, but is old resistance becoming new support on the June and July, some of those more deferred contracts? $100, that's a nice number to stay above if we can do that more long term. And that's the $1 million question today.
And have you heard any numbers on the hog side of things, Vince, that you'd like to share?
I think Andrew's got a good point, but as we look over the last week, probably we've seen the June, July, and August hogs putting in new contract highs while the April selling off. And I think a lot of that is nothing more than spread trade. Part of that due to the fact that spread was closer than it gets a lot of times. But the other side of it, just looking at much like the cattle market, numbers are going to get tighter in the summer. So we're going that point. Now the real question gets to be, where can we go with those summer months? I haven't done a lot of work, but I would think 104 to 108 could be some good spots in there. Not that we can't go higher than that if we get down the road.
Okay. And then another market I guess I've been kind of keeping an eye on today, and it's something we talked about yesterday at the meeting that Andrew's brought up, that the US dollar, that's one that we'd like to see maybe go down to help the export markets in the ag commodities sector. I see that it's down 54 points today. What do you make of that, Vince? Is it kind of breaking through some support there, and that's something to keep an eye on that might help us a little bit? Or
I think we can put some weakness in this market where you find support. The tough part in that dollar is so much on what is the U.S. economy doing and what are they doing at interest rates to jar that. If we go down, it's going to help us. But if you really want to help, you got to get down around that 94 to 96 versus setting at 103. But are we from where we were going in the right direction to help that? Yeah, we are.
And then I think we'll wrap this episode up here with a little bit of talk about the diesel market. I know we sent a rec out to maybe lock up some cash needs there a few days ago. We've heard some cash prices, around that $2.85 to $3 mark. Is that something that you guys see as still a spot on the charts, or is it? I know the energies have been up today. What should a guy make of that, Andrew?
Yeah, we talked about here a couple weeks ago that seasonally we'd like to try and buy fuel second to third week in February. And for myself on the farm, I did get enough fuel locked in here. That would have been the third week of February. I got enough fuel locked in to get myself to harvest, and didn't want to stick my neck out on to get myself through the rest of the year, just because there are a lot of people that believe during an election year you can get cheaper fuel prices. So sitting on my hands at a moment for a little bit of that fuel purchases, but for the near term, I did like the idea of getting some locked in here. South of $3 is always my goal for the farm diesel, and if you can get a whole lot better than that, why not take it?
I think with that being said, we'll wrap this podcast up. Thanks to all the listeners out there. For more information, feel free to check out our website, farmerstradingco.com, or feel free to reach out to the office. Our number is 605-996-6500. Thank you.